Hello friends, welcome back. Now we are going to start with a new topic, that is revision for input tax credit. So this is a very interesting topic and very important topic from exam point of view, and lot of questions are given by ICAI itself in their questions for practice. So this questions also we are going to discuss all the questions. There are around some 17 questions which are given in ICAI questions for practice. All those questions we will be discussing. And sorry for some delay, because hope you can understand my pain in doing recording, thereafter editing, and then converting into a file and uploading. So it is taking hell lot of time, and that's the reason why I'm not able to do it more frequently. And that too now, when the kids are at home, I'm not able to do the recording. So therefore, only when they are sleeping and when they are playing in another room, I'm just coming and doing recording. Okay, fine. And with respect to this revision 4 input tax credit, you have the basic knowledge about input tax credit. So even though you have some basic knowledge, I'm just repeating for the sake of repetition. There is a registered person, and that particular there is a registered person, and that particular registered person is making some inward supplies and outward supplies. So there is a registered person, and this registered person is making inward supplies as well as outward supplies. With respect to inward supplies, a price is paid with GST, correct? Say for example, 10,000 rupees is paid plus 1,200 rupees as GST. Then with respect to outward supplies, some GST is payable. Say the value of the outward supplies is 15,000 plus GST is 1,800. So this 1,200, which is GST paid on inward supply, can be taken as input tax credit. This 1,200 rupees can be taken as input tax credit and can be adjusted against the GST payable on outward supply. So this is known as my gross liability. This 1,800 is known as my gross liability. So 1,800 rupees gross liability and 1,200 rupees ITC. Now I can use this ITC for payment of my gross liability, which means what is my net liability? Net liability will be equals to rupees 600. So which means that GST paid on inward supplies can be taken as ITC and adjusted against a GST payable on outward supply. This is the concept of input tax credit here. Now, how this credit is taken in the GST regime and how that will be adjusted with the outward supply, that is GST payable on outward supply. So let's see one schematic diagram related to this. Have a look into this. Provisional ITC versus final ITC. What is the first step? Say for example, you are a registered person. You are making some inward supply. See, GST paid on inward supply only can be taken as ITC na. So you are making some inward supply. And whatever is that inward supply on the GST paid, you will enter into your accounting records. So what is the entry that you will pass? Suppose if it is purchases of raw material or any inputs. So you will make an entry, purchase account debit, input tax credit account debit to creditors or to cash bank, etc. That is with respect to purchase of raw material. Then with respect to purchase of input capital goods, asset account debit, input tax credit account debit to cash or bank or creditors. Then with respect to input services, so our inward supplies are classified into three here: inputs, capital goods and input services. What are capital goods? Any goods that you buy and that you capitalize in your books, then it will be known as capital goods. And any goods that you have purchased and not capitalized in your books, then it will be known as inputs. And what are input services? Any service received by the business will be called as input service. Now what is the entry for input services? Service charges account debit, input tax credit account debit to cash or bank or creditor, so that you will enter. When I refer to input tax credit, this input tax credit, you will not put it in a single ledger. You will put it under multiple ledgers called as input tax credit CGST, CGST receivable account debit, then SGST receivable account debit, and IGST receivable account debit. Like that, you will put it in 3 instead of SGST. If you are located in a union territory, then you will make it as a UTGST. And if suppose your purchases are eligible for compensation cess, then even compensation cess can also be taken as credit. Now, these entries when you pass in your books, so your books will have some accounting information related to the ITC. That is first step. Is this the ITC that you can take for adjustment with the liability? Never. That is the ITC as per your books, and that's a provisional ITC. Now, this ITC, whatever you have recorded in your books in the month, the total needs to be mentioned in GSTR 3B return, which you are filing by the due date. Usually it is 20th of the month following every month, and that due date gets extended from time to time for many reasons. And due date, whatever is the due date by which you need to file GSTR 3B, in the GSTR 3B you will declare ITC information. Whether purchase wise ITC information you will declare in GSTR 3B, no, consolidated ITC information you will declare in GSTR 3B. Then what's the next step? As and when you declare ITC in GSTR 3B, then that amount what you have declared will go to the electronic credit ledger, which will be maintained by GST network on behalf of a registered person. Now, input tax credit is an asset or liability to you. Yeah? It's an asset. So asset shows a debit balance, correct or not? Now, they are maintaining ledger on behalf of you, so that input tax credit shows a credit balance. Input tax credit shows a credit balance in the ledger because they are maintaining on behalf of you. So it's a contra, like cash book, passbook concept. So for you it is debit and there it will be credit. Now, electronic credit ledger in the credit balance, that whatever declared ITC by you in GSTR 3B gets reported. Now, is that final? No, because whatever you declare that will only come there, and this still provisional ITC needs to be matched with the GSTR 2A. Now, what is GSTR 2A? GSTR 1 is a return which is filed by every supplier. Say you are making purchases from some 20 suppliers. So every supplier will be reporting the outward supply made to you in their GSTR1, and that whatever they have reported in GSTR1 will come in an auto-populated return called as GSTR2A recipient wise. That supplier, you are not only the recipient, there are multiple recipients. Now, every supplier making supply to multiple recipients, with respect to one recipient, they will be taking from multiple suppliers and putting into one sheet called as GSTR2A. Who will do this? GST network will do, and that will be made available to you. That is known as GSTR2A. I have given the details of this in this side here. What is GSTR1? What is GSTR2A? What is GSTR3B? All those details I have given. Now, this particular GSTR2A is the return containing the ITC details as declared by your supplier, and GSTR 3B is the ITC what you have availed. Now these two needs to be checked. If it is matching, which means that whatever ITC you have declared is correct and you can go ahead with this. Suppose if it is not matching, you need to reverse that ITC. Why it will not match? That particular supplier has made the transaction, but he failed to report in his GSTR1, means he did not pay any GST, so you cannot take ITC, you need to reverse that. Now, there is a relaxation in this place here. What is that relaxation? Even though it is not matched, up to 20% of the eligible ITC you can take. For example, if the total credit as per GSTR 3B that you have taken for a particular month is 1,50,000. So it is a credit as per GSTR 3B. As per GSTR 3B, ITC equals to rupees 1,50,000. This is the ITC as per GSTR 3B. Then as per GSTR 2A, ITC is rupees 1 lakh. ITC is rupees 1 lakh. Now, what is the matched ITC and unmatched ITC? What is the matched ITC? Matched ITC is rupees 1 lakh. And what is unmatched ITC? What is unmatched ITC? Rupees 50,000. Now, actually what you need to do with this 50,000? You need to reverse. But we have a relaxation. What is it relaxation? Out of the matched ITC, you take 20%. Out of the matched ITC, you take 20%. And what is that? Rupees 20,000. And out of the unmatched ITC, you can enjoy 20,000 and balance 30,000 you need to reverse. So therefore, how much ITC I can take? 1 lakh I can take, plus this 20,000 I can take, 1,20,000, and balance 30,000 I need to do the reversal. So this is the relaxation that we have. Now one more point here. Not just matched ITC, eligible matched ITC. Now let's see with another illustration. What is the ITC as per GSTR 3B? ITC as per GSTR 3B as usual 1,50,000. And what is the ITC as per GSTR 2A? That is rupees 1 lakh. ITC as per GSTR 3B is 1,50,000. ITC as per GSTR 2A is rupees 1 lakh. Now, in this scenario, we need to identify not matched ITC. I need eligible matched ITC. So what is matched ITC? What is matched ITC? Matched ITC is rupees 1 lakh. But out of this 1 lakh, what is eligible matched ITC? What is eligible matched ITC? What do I mean by eligible matched ITC? Not 1 lakh fully is eligible. Na? There could be some blocked credits, or there could be some inward supplies which are used for exempted supplies or non-business purpose. So not entire 1 lakh is eligible matched ITC. So therefore, I need to take eligible matched ITC and say that eligible matched ITC is 80,000. So now, what is the unmatched ITC? Unmatched ITC availed. Unmatched ITC availed. So eligible matched ITC is only 80 out of 1,50,000. So what is the unmatched ITC that is availed? 1,50,000 minus 80,000, that equals to 70,000 is the unmatched ITC that is available. Now, you take eligible matched ITC, multiply 20%. So what is that? 80,000 into 20%? 16,000. Now, how much ITC you can take out of this 70,000? Only 16,000 can be taken, and remaining 54,000 needs to be reversed. Remaining 54,000 needs to be reversed. So which means how much ITC I can enjoy here? This 80,000 I can enjoy, even this 16,000 I can enjoy. So total 96,000 is the ITC I can enjoy. So therefore, what is the relaxation? How much ITC I can take with respect to unmatched ITC? I can take 20% of the eligible matched ITC I can take. Now, you may get a doubt in this. Why am I taking 1,50,000 minus 80,000? See, ITC as per GSTR 2A 1 lakh, but in this, we need to take out 20,000 which is blocked credit, then 80,000. Then while computing this 1,50,000, anyhow you would not have taken 20,000. That's a blocked credit you would not have taken. So therefore, the comparison should be now between 80,000 and 1,50,000, not between 1 lakh and 1,50,000. Now, look into that information. Unmatched ITC not to be reversed in the following cases. What is that? Means in the following cases, matching is not required. The first point, IGST paid on import of goods. On import of goods, On import of goods, we will be paying basic customs duty, then social welfare surcharge, IGST, and lot of other customs duties. Now, in that IGST component is there, na? That IGST component can be taken as ITC. And will it come in GSTR 2A? No, it will not come in GSTR 2A. Still, you can enjoy the ITC. Then GST paid under RCM, reverse charge mechanism. That is, whenever recipient is liable to pay GST under RCM 9394, in that case, can that GST paid under RCM be taken as credit? Yes, it can be taken. And should it be matched with GSTR 2A? No, it need not be matched. Same way, credit distributed by ISD. Here there are two views here. Here there are two views. View number 1, it needs to be matched. View number 2, it need not be matched. But your study material is silent on this. So you can write any point, like you can write this point or you can ignore this point. That is, input service distributor will distribute some credit na. So whatever credit that is being distributed by the input service distributor, and that will be reported in GSTR 6. And GSTR 6 credit distributed by ISD, the recipient unit can take it as ITC in their 3B and it will come in 2A. And there are two views whether it should be matched or not, need not be matched. And even if it is not matched, still we can avail ITC is one view. And another view is that you cannot take the ITC if it is not matched. There are two views in that, so you can follow anything is fine in that. Then fourth point, 20% of the eligible matched ITC. That's what we have discussed now. It's a latest amendment. Remember, 20% of the eligible matched ITC. Now, remaining ITC, if there is anything which is not matched, that needs to be reversed. That is point number 5. If provisional ITC does not match, excess ITC availed by the recipient shall be added to the output tax liability. Now, what if it is matching? Then whatever is declared in 3B can be taken as ITC and that provisional will become final. So this is about this, and you have to show this reconciliation between 2A and 3B. Yes, you have to show this reconciliation between 2A and 3B in the GSTR 9 annual return. See that GSTR 9 annual return needs to be filed by a registered person, wherein reconciliation should be made between ITC availed in terms of 3B with ITC as per 2A, which is usually termed as matching of ITC, and unmatched ITC should be reversed, means it should be added to the output tax liability. And about GSTR 1, 2A, 3B, electronic credit ledger, all these notes I have given here. So this is the basic premise of availment of ITC here. Now, next let's proceed to manner of utilization of credit. We have few principles which we need to keep in mind. First, principle number 1. Which ITC can be availed? We can avail all 4 ITCs, boss. We can avail all 4 ITCs. What 4 ITCs? How many GSTs that we have? We have CGST, SGST or UTGST, that is on inward supply. We have made some inward supply. On that inward supply, we have GST paid on inward supply, which can be taken as ITC. And what GSTs that we can pay? We can pay CGST, then we can pay SGST or UTGST. So let me take this as separate item, that is UTGST, and then IGST. So this is with respect to GST paid on inward supply, which is called as ITC. All 4 can be taken as ITC. Then with respect to outward supply, so we have GST payable, and same GST payable may be there, right? That is CGST, SGST, UTGST and IGST. And no need to make note, I am just writing this to explain the concept. Now we have a 20 cell matrix here, that is on inward supply we have paid some GST, on outward supply we have paid some GST. Now, can CGST credit be used for payment of CGST liability? Yes. Can CGST credit be used for payment of SGST liability? No, that is not possible. Can CGST credit be used for payment of CGST liability? That is, I have CGST credit. Can it be used for payment of SGST liability? No. Can CGST credit be used for payment of UTGST liability? No. Can CGST credit be used for payment of IGST liability? Yes. Same way, SGST for CGST not possible, SGST for SGST and SGST for IGST possible, and SGST for UTGST is not possible. UTGST for CGST, SGST not possible, but UTGST, IGST possible. Then IGST can be used for payment of any IGST credit can be used for payment of any GST liability. So out of this, what are the 2 points that you can remember? We can remember the first point that there is no restriction in case of IGST, means IGST credit can be used for payment of any GST liability, and any GST credit can be used for payment of IGST liability. So that's the first point in first principle. See that there is no restriction with respect to IGST, that is IGST can be used for payment of any GST liability and any GST credit can be used for payment of IGST liability. Then second principle here. What is it? Second principle, between CGST, SGST and UTGST, respective credit can be used for payment of respective liability and cross utilization is not possible. So that's what we have. Second point in the first principle, amongst other taxes, respective credit can be used for payment of respective liability and cross utilization is not allowed. So this is with respect to principle 1. So come on, what is the 2 points that you need to remember with respect to principle 1? Point number 1. There is no restriction with respect to IGST, which means IGST credit can be used for payment of any GST liability and any GST credit can be used for payment of IGST liability. And second point, with respect to the remaining GSTs, respective credit should be used for payment of respective liability and cross utilization is not allowed. Then second principle here. Now IGST credit can be used for payment of any GST liability now. Is there any priority? Yes, there is a priority. First to use IGST credit for payment of IGST liability. Still you have some IGST credit that you can use for payment of CGST or SGST or UTGST. This is rule 88A, which says that in any manner, in any proportion I can use 50% for CGST, SGST, or I can use fully for CGST, or I can use fully first for SGST, or I can give 80-20. So it's up to me. I can distribute that credit and I can enjoy that. So there is no restriction now with respect to the order of utilization. So first for IGST payable. Now whatever remaining IGST credit I have, I can use it between CGST, SGST and UTGST in any manner and in any proportion. Then CGST credit, SGST credit and UTGST credit, that is with respect to these three here, with respect to these three, what is that? First for payment of respective liability and then only for IGST payable. This is principle number 2. Now, what is that you need to remember for principle 1? There is no restriction with respect to utilization of IGST. Principle number 1, point number 2, with respect to other credits, respective credit for payment of respective liability. Then principle 2, IGST credit first for IGST payable, then for CGST, SGST or UTGST in any manner, any proportion, rule 88A. And the remaining 3 credits first for the respective liability, then for IGST payable. Now we are proceeding to principle 3 here. What is that principle 3? Before using CGST credit and SGST credit, ensure that IGST credit is exhausted. So you have some IGST credit, you have some CGST credit and SGST credit. Now you have to pay CGST liability. Now before touching CGST credit for payment of CGST liability, exhaust IGST credit. So completely IGST credit should have become 0 and then only the next credit that is CGST or SGST credit you can touch. That is principle number 3. Then principle number 4, what does it say? Now what I have seen in principle number 2 is one credit and multiple liabilities. Now I have multiple credits and one liability called as IGST liability. In principle number 2, I discussed IGST credit. I have multiple liabilities. One credit, multiple liabilities. Now I have multiple credits and one liability called as IGST. Now for payment of that IGST liability, which credit should be used first? First use IGST credit because that is as per principle 3. Because IGST credit should be exhausted. So first IGST credit, then CGST credit, and then between SGST or UTGST you can decide. Now There are three alternative answers for the purpose of utilization of IGST credit. Now, let's see that three alternative answers with respect to one illustration. Look into this illustration. Compute net GST payable from the following data: CGST, SGST and IGST, GST payable on outward supply, GST paid on inward supply. Now, if you look into this question, what is that you can observe? I have excess IGST credit that can be used for payment of CGST and SGST. See, first don't touch the CGST credit and SGST credit. Principle 3 will come into play. What does it say? Completely IGST credit should be exhausted before utilizing CGST and SGST credit. Now, what is the IGST credit? 10,000 rupees. Now, out of this 10,000, first what should I do? I should use it for payment of IGST. This is the first point. This is the first point. So, which means what is the balance that is available? I have a balance which is 5,000. This 5,000 I can use for a payment of CGST, SGST in any manner and in any proportion. Now, what is the first alternative? I can use 5,000 for payment of CGST. That is the first alternative. If I use 5,000 for payment of CGST, then I will not have any CGST liability. And IGST liability is over. IGST credit is also over. Now, using SGST credit, I will pay SGST liability. So, therefore, SGST credit is exhausted. Still, SGST liability, how much I have? 3,000. Can I use CGST credit for payment of this? That is, can I use this 2,000 for payment of this? No, I cannot use this for payment because CGST credit cannot be used for payment of SGST liability. Again, I am repeating with respect to alternative 1. Have a look into this. So, that is, first, I have IGST credit 10,000. I am using it for a payment of IGST liability 5,000. Still balance, what is that I have? 5,000 rupees I have. So, this will not change here. This will not change. There is no difference in that. Now, alternative 1. What is that alternative 1? Use IGST credit. Use IGST for CGST liability. Then, what will happen? Now, only 5,000 I have IGST liability exhausted. Now, out of 10,000, only 5,000 I have. That 5,000 I can use for payment of CGST. So, CGST is gone. Balance gone. CGST gone. Now, what is that I have? I have SGST liability and SGST credit. SGST liability 5,000 and SGST credit 2,000. Using this 2,000, I will pay 5,000. So, still I have 3,000. Now, can I use CGST credit 2,000 for payment of 3,000? No, cross utilization not possible. Then what will happen in alternative 1? In alternative 1, I will be having 3,000 rupees as liability and 2,000 as excess credit which I can carry forward. This is with respect to alternative 1. So, in alternative 1 what I will be having? Liability 3,000, liability 3,000, liability 3,000. And excess ITC 2,000. So, this is the scenario in alternative 1. Now, alternative 1, unnecessarily I am paying 2,000. How unnecessarily I am paying 2,000? Because when I use this ITC for payment of this 3,000, if I can use this ITC for payment of this 3,000, I don't have to pay the 2,000. Now, I am unnecessarily paying the 2,000. So, my cash flow is getting affected. Now, this answer is correct. So, we are not deciding whether it is correct or wrong. We are just analyzing what are the various options that is available. Now, I am proceeding to alternative 3 here. Alternative 3. What is that alternative 3? Alternative 2. Alternative 2. What is that alternative 2? I have 5,000. Using that 5,000, I can pay SGST. Then, using CGST credit, I can pay CGST liability. So, still I have to pay 3,000. So, which means I will be having 3,000 liability and 2,000 credit. So, alternative 1 and alternative 2 will give the same result. What is that? So, IGST I am using for CGST. IGST for SGST. Alternative 2. So, what will be my liability? My liability is 3,000. And I have excess ITC of 2,000. Now, let's go with another alternative, alternative 3. That is, why should I use This way I can use in any proportion. So I am using 50-50. Why 50-50? Look into CGST, SGST liability. So it is in equal ratio. So therefore I will be using 50-50. So therefore first I will pay CGST, SGST. So 2500, 2500 I will pay. So balance 2500, 2500. Then I will use this. So then what will be the balance that I will be having? 500, 500. In alternative 3, what will happen? IGST for both CGST and SGST, that resulted into what? Liability of only 2000. No, liability of only 1000, and there is no excess ITC. So considering the cash flow situation, I will go for alternative 3. But it does not mean alternative 3 is only correct. Considering the cash flow situation, I will go for alternative 3. But this discussion you have to make in the exam here. That is, you have to check the cash flow scenario and you need to make this discussion in the exam. And that's what I have given here as a note. Alternative 1 and 2 is also correct, but I am going for alternative 3 considering the cash outflow, because alternative 3 leads to reduction in the cash outflow. So this is with respect to manner of utilization of credit. Now we are moving on to the next area. In input tax credit chapter, we have 5 sections here. Section 16, conditions for availment of ITC. Section 17, apportionment of credit and blocked credit, that is in section 17. Section 18, input tax credit in special cases. Section 19, job work. In case of job work, what is the ITC treatment? Section 20, input tax credit distributed by the input service distributor. The concept of ISD is in section 20. Section 21 is linked to ISD concept only. So section 16 to section 21. Section 16 to section 21 deals with input tax credit. In that, section 20 up to that only is important. 21 is connected to 20. So you can remember how I should take credit. Like when should I take credit? Refer section 16. How I should take credit? Section 17. There are some special cases how I should take, section 18. So when should I take credit? Section 16. How I should take credit? 17 and 18. And job work, goods sent on job work, section 19. And input service distributor, 20 and 21. Now we are starting with section 16, conditions for availment of ITC. Now here, input tax means what? Any tax, CGST, SGST or IGST. But remember, composite tax will not come under input tax here. What is composite tax? Tax that is paid under composition scheme. Generally, a person who is opting for composition scheme is not supposed to collect composite tax from the recipient. But if at all that person collects the composite tax from the recipient, can the recipient take ITC? No, the recipient cannot take ITC. And whether IGST paid on import will come under input tax? Yes. Whether GST paid under RCM will come under input tax? Yes. So that is the meaning of input tax. Now there are 2 basic conditions as per section 16 subsection 1. Section 16 subsection 1 gives 2 basic conditions. What are those 2 basic conditions? Only a registered person can avail ITC. And that inward supply on which ITC to be availed should be used or intended to be used. Used or intended to be used in the course or furtherance of business. So what are the 2 basic conditions here? Condition number 1, only a registered person can avail ITC. Condition number 2, such ITC should be that if you want to take ITC on the inward supply, such inward supply should be used or intended to be used. What is the meaning used? You are using it now. Intended to be used, not used now, to be used in future. Used or intended to be used. In the course or furtherance of business. In the course means for that business, or furtherance of business for an activity which you are going to do in the future. No way connected to the existing, but in furtherance of business also you can take ITC. But it should be connected to your business. Then following 4 additional conditions should be satisfied. This is what section 16 subsection 2 says. 4 additional conditions. What are those 4 additional conditions? Number 1, should be in possession of valid tax paid document. Should be in possession of valid tax paid document. What is a tax paid document? Tax invoice or debit note. Tax invoice or debit note, or ISD invoice, input service distributor invoice. So either you should be having a tax invoice, or you should be having a debit note, or you should be having a ISD invoice. That is your input service distributor. Your head office will distribute some credit now. That credit will be distributed through an ISD invoice. So you should be having ISD invoice. Suppose on import, if you want to take ITC on import of goods, so you should be having bill of entry. So these are the tax paid documents. Only then you can take ITC. That is the first additional condition. Second additional condition, you should have actually received the goods or services. You should have received the goods and or services. It should have been actually received. Now, I am in possession of tax invoice this month, but I will be receiving goods in the next month. Can I take ITC this month? No, I cannot take ITC this month. I can take ITC only in the next month. Then, tax on such supply has been paid either in cash or utilization of ITC. So this condition is for whom? This condition is for supplier. This condition is for supplier. All conditions is for the registered person who is taking ITC, but this condition is for the supplier. Means if you want to take ITC, if you want to take it, you are a registered person. If you want to take ITC, your supplier is there na. That supplier should have paid the GST, then only you can take ITC. This is where matching concept I told you. When your supplier has not paid GST, you cannot take the ITC. And even though you can take ITC on a provisional basis, but after matching that gets reversed. So therefore, tax should be paid on such supply by the supplier. And how that supplier should pay tax? Either using his input tax credit or by cash he can make the payment. Then he has furnished return under section 39, that is GSTR 3B. Because without furnishing GSTR 3B, we cannot take ITC. Now, what's the point in taking 1 crore rupees as ITC in your books? That is of no use. Only it should get reflected in GSTR 3B in input tax credit. GSTR 3B that goes to electronic credit ledger, and that will only get adjusted with the liability. So there is no point in taking the credit that much here. So therefore, registered person should furnish the return. Registered person should furnish the return for the purpose of taking the credit. Then these 4 conditions has some special points here. So total 6 conditions. Can you tell me what are the 6 conditions? Condition number 1, you should be a registered person to take ITC. Condition number 2, on inward supplies on which you want to take ITC, it should be used or intended to be used in the course or furtherance of business. Condition number 3, you should be in possession of valid tax paid document. And condition number 4, you should have actually received the goods or services. Condition number 5, your supplier should have paid the tax. Condition number 6, you should have filed the return. Now, with respect to this 4 additional conditions, we have some special points. Let's try to understand that. You should be actually receiving the goods or services, then only you can take the ITC. Now, let's take a scenario here. Let's take a scenario. There is one person who is X Limited, and X Limited placed an order with a supplier. X Limited placed an order with a supplier to deliver the goods to Y Limited. So who placed the order? X Limited placed the order. X Limited placed the order to the supplier. Now supplier delivered the goods to whom? Delivery of goods to Y Limited. Now this supplier should raise invoice to whom? So between the supplier and Y Limited, is there any privity of the contract? No, there is no privity of contract between supplier and Y Limited. Is there any privity of contract between supplier and X Limited? Yes, there is a privity of contract between supplier and X Limited, which means supplier has to raise invoice to X Limited only. Supplier has to raise invoice to X Limited, because who will be called as recipient? The one who is liable to pay consideration is known as recipient. The one who is liable to pay consideration is known as recipient. Here, who is liable to pay consideration? X Limited is liable to pay consideration. So therefore, for this supplier, the recipient is X Limited. So invoice will be raised to X Limited. Now, on this invoice, can X Limited take ITC? They cannot take ITC because they have not received. So you should be having invoice plus you should have received. Then only you can take ITC. They cannot take ITC because they have not received. Fine. Can Y Limited take ITC? Y Limited cannot take ITC because they have received the goods but they don't have the invoice. Then how to fix this anomaly? We have something called as bill to ship to invoice. So the invoice should be called as B2, that is bill to ship to invoice. That is, in this invoice, what will be the billing address? Bill to is X Limited. Bill to is X Limited. But ship to is Y Limited. So therefore, in that invoice, they need to mention billing address as X Limited and shipping address as Y Limited. And who will be taking ITC? X Limited, which is billing address, will take ITC. But they are not received. So a deeming fiction is created. What is a deeming fiction? The day when Y Limited received the goods, it is deemed that X Limited has received the goods. So it is, what is a deeming fiction? The day when shipping address has received the goods, it is deemed that the billing address has received the goods and the billing address can take the ITC. So this is with respect to bill to ship to transaction. Now, is this applicable only in case of goods? No, it is applicable even in case of services also. Now, let's take the same situation. X Limited requested the supplier to render the services, some consulting services, to their subsidiary company Y Limited. Accordingly, this supplier has rendered the services to Y Limited and supplier can raise the invoice to X Limited. Same bill to ship to invoice can be raised to X Limited as billing address and Y Limited as shipping address. And can X Limited take the ITC with respect to the services? Yes, X Limited can take ITC with respect to the services. So therefore, that bill to ship to transaction, which address will take ITC? Billing address. Goods delivered or services provided to third person, that is shipping address, on the direction of the registered person, billing address. Registered person is billing address, deemed to have been received by the registered person. So the billing address is deemed to have received as and when the shipping address has received the goods or services. ITC available to the registered person means to the billing address ITC is available. That is billing address. That is billing address. Then next, another point, see, recipient has to make payment to the supplier. Is there any such condition in these 6 conditions? No. There is nowhere it is given that recipient has to make payment to the supplier. Nowhere it is given that recipient has to make payment to the supplier. So whether recipient has made the payment or not to the supplier, but ITC can be availed by the recipient. Now, because of this, there may be a torture to the supplier. That supplier will not receive the money, but recipient will enjoy the ITC. So therefore, there is one condition here. What is that condition? Recipient should make payment to the supplier within 180 days from the date of invoice. Now, let's try to understand this. I am supplier and you are recipient. You should make payment to me within 180 days from the date of invoice. Only then the ITC you have enjoyed beginning, because as and when I raise invoice you would have taken ITC. As and when I have raised invoice you would have taken ITC. Even if I have rendered any services or supplied goods in the same month and invoice also same month, you would have taken the ITC. And even I would have paid the GST liability. Now what happens? You have to make payment to me within 180 days from the date of invoice. If you have made the payment within 180 days, you enjoy the credit. If you have not made payment to me within 180 days from the date of invoice, whatever credit that you have taken, you need to reverse. Okay, sir, I will reverse, but with interest at the rate of 18% per annum from the first date of availment till the date of addition to the liability. So I have to pay interest at the rate of 18% per annum. That is, let's see this with an example. Say on 1/10/2018, on 1/10/2018, supplier gave an invoice to recipient, and that invoice is for rupees 1 lakh plus GST of rupees 18,000. So one supplier has given the invoice to one recipient on 1/10/2018. What is the value? 1 lakh. And what is the GST? 18,000. And ITC availed. So this invoice is for which month? October month. And for October month, recipient availed ITC of October 2018 on 15 November 2018. Is it possible? How 15 November 2018? Say they have filed GSTR 3B. GSTR 3B filed on 15/11/2018. Now, what is the time limit within which the payment should be made to the supplier? So, from 1/10/2018, you add 180 days. You will be getting the deadline. So, October 1st. So, in October, how many days? In October, 30 days. And in November, 30 days. In December, 31 days. And in January, 31 days. And in February, 28 days. So total how many days? So 30 plus 30, 60, 90 and 120, 140, 150 days exactly. So therefore in March it is 30. That is a 180th day. So therefore what is 180th day? 30 March 2019. 30 March 2019 is the 180th day. 30th March 2019 is the 180th day. So by the date the payment should have been made. But the payment is not made by the recipient to supplier by this date. Now this comes in March 2019. Say for March 2019, GSTR 3B filed on 18th April 2019. For March 2019, GSTR 3B filed on 18th April 2019. Now, what they need to do in this GSTR 3B, they need to reverse ITC with respect to 18,000. So, reversal for March month. Reversal for March month equals to rupees 18,000. Which March? March 2019. 18,000. Add interest. We need to pay interest here. Interest. How much will be the interest? How much we are reversing? 18,000 we are reversing. See, reversal means if I have balance, it will get adjusted from there. If I don't have the balance in ITC, I have to pay. Interest 18,000 into 18%. Interest will be 18% per annum. From when to when? From the date of availment. What is the date of availment? Date of availment is 15/11. So you need to count from 16/11/2018 to reversal. When I am doing reversal, 18/4/2019 I am doing reversal, divided by 365 days. So therefore this is the interest component that I will be paying. But for payment of interest I cannot use a ledger, remember. For payment of interest I cannot use a ledger. For payment of interest I have to pay out of cash ledger, not credit ledger. Input tax, electronic credit ledger cannot be used. Only electronic cash ledger can be used for payment of interest. But for this reversal 18,000, I can use the electronic credit ledger. So that is this. ITC to be added to the output tax liability with interest at 18% if value plus tax on goods and or service is not paid within 180 days on the issuance of invoice. And here, say if the payment is made at a later point of time, can the recipient take the ITC? Yes, the recipient can take ITC as and when the payment is made to the supplier, ITC can be availed, whatever is reversed. But remember, interest cannot be taken as ITC. Only whatever is reversed as ITC, that only can be taken. But interest is paid, that cannot be taken as ITC. This 180 days is a self-assessment exercise to be done by the recipient. And it is not applicable in 3 cases. What are those 3 cases? RCM. Whenever you are liable to pay GST under RCM, this is not applicable. And deemed supply without consideration. That is, you are making some supply under 7(1)(c). Anyhow, there is no consideration. 7(1)(c), there is no consideration. In that case, we don't have to do like 180 days computation is not required. Then, in valuation, we remember one point. What is that? If supplier's liability met by the recipient, if supplier's liability met by the recipient means recipient is making payment to one third person. Even though the payment is not made to the supplier, but the payment is made to the third person, so this 180 days condition is not applicable in that case. These are the three exceptions where that 180 days point is not applicable. Then, now, let's proceed to another issue. So, what is the first issue? Bill to ship to transaction. Second issue, if payment is not made within 180 days. Then third issue, what if the goods are received in lots? That is, I placed a single order here, but I am receiving goods in lots. So, when can I take ITC? I can take ITC only on receipt of last lot. 100 units I placed in order. And in first month, 30 units. Second month, 30 units. Third month, 40 units. With respect to entire 100 units, I can take ITC only upon receipt of last lot. Instead, if I can ask the supplier to give invoice separately, for 30 units separately, next 30 separately, next 40 separately, I can take ITC in the respective month. So that's an exception, or that's a loophole here. Then next, 16 subsection 3 here. 16 subsection 3. 16 subsection 3. That is, if I have purchased any capital goods and I claim depreciation including the tax component. I purchased capital goods for 10 lakhs and I paid GST 1,20,000. Now, what is the total price of the capital goods? I have paid 11,20,000. So, I should calculate depreciation only on 10 lakhs. If I have calculated depreciation on 11,20,000, I cannot take ITC with respect to that 1,20,000. So, if depreciation claimed on tax component, ITC is not allowed. Then, 16 subsection 4, time limit for availment of ITC. What is a time limit? We have to take ITC pertaining to an invoice in a financial year by 20th October of the succeeding financial year or date of filing annual return, whichever is earlier. What is the logic behind this 20th October? It is like due date of filing return pertaining to September of the succeeding financial year. If the due date gets extended, even this 20th October gets extended. So you remember, for September month of the succeeding financial year, there is a due date of filing GSTR 3B. That date or date of filing annual return. Date of filing annual return, not the due date. Date of filing annual return, whichever is earlier. And this is not applicable in case of reavailment of ITC reversed earlier. I have taken some ITC, I reverse, and again I am taking ITC. No need to check this time limit. This time limit already we have come across in another place, that is time limit for issuance of credit note. Credit note to be issued by 30th September of the succeeding financial year or date of filing annual return, whichever is earlier. There it is by September end. But here, due date of filing return pertaining to September of the succeeding financial year or date of filing annual return, whichever is earlier. So, exception, reavailment of ITC reversed earlier. Then, contents of invoice for availing ITC. See, you should be in possession of tax invoice. But in that tax invoice, if these details are there, that is sufficient. It need not have all the contents. If these minimum details are there, you can still take the ITC. What are those contents? First, it should be having GSTIN of the supplier. Second, it should be having GSTIN of the recipient. GSTIN of supplier and GSTIN of the recipient. That should be there. Thereafter, it should have description and value. Description and value. Description and value. And below that, first GSTIN of supplier, then GSTIN of recipient, description, value, then tax. What is the amount of tax that is charged? If it is interstate supply, then place of supply should also be there. So these are the components that should be there. What are the components? GSTIN of supplier, GSTIN of recipient, thereafter description of the goods or services, and then tax. Finally, if it is interstate supply, place of supply. These minimum contents, if it is there, then you can enjoy the ITC on that tax invoice. So it need not have all the information. So these minimum details, it is there. So therefore, you tell me HSN details is not there, SAC details not there. Can you still take ITC? Yes, you can still take ITC. and rate is not there, description is there, rate is not there, still you can take ITC. So these are the minimum details that should be there in the tax invoice. Suppose if these details are not there, if any one detail out of this is missing, even though you have really paid GST, you cannot take the ITC here. Then the inward supplies should be used or intended to be used in the course or furtherance of business. And there, what is the meaning of inward supply? Already I told you. Inputs, input service, and capital goods. What is capital goods? Those goods which are capitalized in the books is known as capital goods. So with this, we completed one section. That is section 16. Section 16 has got a comma, not a full stop, because conditions for availment of ITC we discussed. That is one side of the coin. We should also see 17 subsection 5 blocked credits, that is another side of the coin. When you interpret these two, then only you will know whether you can take ITC with respect to any purchase or not. So therefore, section 16 conditions for availment of ITC. Also the blocked credit we need to check. The steps will be like, step number 1, check whether the inward supply, whatever you are making, is in the blocked credit. Yes, you cannot take ITC, even if the conditions under section 16 is satisfied. So 17 subsection 5 will overrule even section 16. First I am making some inward supply. Is it in the blocked credit? Yes, it is in the blocked credit. Don't take ITC. No, it is not in the blocked credit. Not in 17 subsection 5. 17 subsection 5 they have given some inward supplies on which you should not take ITC. These are known as blocked credits there. And if it is not a blocked credit, then refer to section 16. In section 16, whether conditions are satisfied. Yes, you can take ITC. No, you cannot take ITC. It is not in blocked credit but not satisfying the conditions. You cannot take ITC. So it should not be in blocked credit and it should satisfy the conditions in section 16. Then only you can take the ITC. So section 16 we completed. Now we need to move on to 17 subsection 5, and remaining portions in 17 we will come and see later. So I am proceeding to 17 subsection 5 blocked credits. Have a look into that. This is in page number 35. Blocked credits. We have first motor vehicles related blocked credit. What is that? If you have purchased any motor vehicle, that motor vehicle will be classified into 3. For transporting persons, vessels and aircrafts, others. In case of other motor vehicle, there is no restriction. You can always enjoy the ITC. What are other motor vehicles? First, what are used for transportation of persons, like buses, cars, two-wheelers will come under for transporting persons. Vessels and aircrafts, normal. Others means lorries, trucks, etc. will come under others, on which you can take ITC. I have given example, truck, lorry. Why ambulance will come under others? Why it will not come under transportation of persons? See, ambulance is a vehicle that is used for providing first aid during the travel. It is not a passenger transportation vehicle or not used for transporting persons. Say, no, if you want any, no, if you are stuck up somewhere and if you want to travel from one location to another location, can we travel by ambulance? Ask, na, they will not transport. So that is for transporting a patient, and during the transportation, if they need to provide a first aid, they will be doing. So ambulance will come under others and ITC is available. Then, with respect to transportation of persons, we need to check the capacity here. Capacity exceeds 13, capacity does not exceed 13. If the capacity exceeds 13, you can enjoy the ITC. What is a motor vehicle used for transportation of persons, capacity exceeding 13? Buses. On buses, can we take ITC? Yes, we can take ITC. What if the capacity does not exceed 13? Now, when you see the capacity, that is including the driver bus. Including the driver, capacity exceeds 13 or does not exceed 13. Driver seat also you add. If the capacity does not exceed 13, it is blocked credit. You cannot take ITC. However, we have exceptions to this. What is that exception? If you are keeping or if you are dealing with that motor vehicle as a stock in trade, is car coming under capacity not exceeding 13? Yes. Now you are a dealer in cars. Can you take ITC? Yes. Even though the capacity does not exceed 13, you are a dealer in cars. You can take ITC. Then You have used it in the business of transportation of passengers. Can you take ITC? Yes. For example, you are a travel service provider here. You are using it in the business of transportation of passengers like cab service provider. Can you take ITC? Yes, you can take ITC. Here one important point you need to remember. Renting of motor vehicles will not come under used in the business of transportation of passengers. You should be really into the business of transportation of passengers. If you are doing any renting of motor vehicles, that will not come under used in the business of transportation of passengers. Then third, you should be imparting driving skills. Yeah, driving schools. If these three people purchase a motor vehicle, even though its capacity does not exceed 13, can they take ITC? Yes, they can take ITC. Then, with respect to vessels and aircrafts, we have it as a blocked credit. Every vessel and aircraft is a blocked credit, but we have 4 exceptions. These 3 exceptions are same. Held as stock in trade, used in the business of transportation of passengers. Number 3, imparting driving skills. Number 4, used for transportation of goods. Observe there, for transportation of goods, it may not be your business. Transportation of goods may not be your business, but transportation of passengers should be your business. Transportation of goods may not be your business. Still, you can enjoy the ITC. So, this is about motor vehicles. Now, let's try to understand this with the help of few situations here. Now, there is a chartered accountant who purchased a car in his business name. Can he take ITC with respect to the car purchased? Car will come under transportation of passengers. Capacity does not exceed 13. Is chartered accountant given under these 3 exceptions? No. Therefore, ITC is not available. Then another example. There is a manufacturing company which purchased a truck for transportation of goods. Can it take ITC? First, truck is not coming under motor vehicles for transportation of persons, vessels and aircrafts. It comes under others. Yes, ITC is available. Then next year, another example. Same manufacturing company purchased a bus for transporting its employees. Can it take ITC? Yes, because transporting employees bus capacity more than 30, they can take ITC with respect to that. It is not a blocked credit. Same manufacturing company purchased a car for transporting its director. Can it take ITC? On car they cannot take ITC because the capacity does not exceed 13 and it is not in the exceptions. Therefore, they cannot take ITC with respect to that. Now, that manufacturing company purchased an aircraft for transporting its director, managing director. Can it take ITC with respect to the aircraft that is purchased? No, because it will not come under the 4 exceptions. It is not there in the exception, therefore they cannot take ITC. Suppose if they purchase a vessel, a ship for transporting goods which is manufactured by them, can they take ITC? Yes, even though they are not in the business of transportation of goods, they can take ITC. So, one manufacturing company purchased a truck, they can take ITC. Purchased bus, they can take ITC. Purchased a car, they cannot take ITC. Purchased an aircraft, they cannot take ITC. Purchased a vessel for transporting goods, they can take ITC. So, like that we can analyze and you have to write this in exam here. This is with respect to motor vehicles. Now, continuation to that. Services in relation to motor vehicles. What are the services? Repairs and maintenance service, then insurance service, and hiring, servicing, then hiring, renting or leasing of motor vehicles. We have 4 services here. In relation to motor vehicles, we are receiving 4 services. What are those 4 services? Repair and maintenance service. Number 2, insurance service. Number 3, authorized service station services. That is when you give it for servicing in the dealer. So that is authorized service station services. Number 4, hiring, renting and leasing of motor vehicles. These 4 services are in relation to motor vehicles. Can I take ITC with respect to these services? Yes, if such motor vehicle is eligible for ITC. No, if such motor vehicle is not eligible for ITC. Now, we discussed one example. What is that? There is a manufacturer. That manufacturer purchased a truck. Can they take ITC? Yes. With respect to the truck, they have taken insurance. Can they take GST paid on insurance premium? Yes, because truck is eligible for ITC, na? Therefore, insurance service is also eligible for ITC. First case. Second, there is a manufacturing company which purchased a bus. And can they take ITC with respect to the bus purchase? Yes. Now on that bus, they have taken servicing, authorized service station services. They paid some service charges. Can they take ITC with respect to that service charges? GST paid? Yes, because that bus is eligible for ITC. Third case. There is a manufacturing company which purchased a car. Can they take ITC with respect to the car? No, they cannot take ITC with respect to the car. Now they have taken that car on rent. On rent they paid some GST. Can they take ITC with respect to the GST paid on renting of car? No, they cannot take ITC with respect to GST paid on renting of car. Because car is not eligible for ITC. Then, fourth example. There is a manufacturing company which purchased a aircraft, and that aircraft they have incurred some repair services. Can they take ITC with respect to the aircraft used for transporting its managing director? No. Now that repair service also they cannot take ITC. Fifth example. There is a manufacturing company which purchased the ship for transporting its goods. Can they take ITC with respect to the ship purchased? Yes. Now with respect to that ship, they incurred some repair services or maintenance services. Can they take ITC? Yes, as ship is eligible for ITC, that repair service is also eligible for ITC. So these four services, we need to first check, is it in relation to motor vehicle? Yes, it is in relation to motor vehicle. Whether that motor vehicle is eligible for ITC? Yes, that motor vehicle is eligible for ITC. Then with respect to these four services also they can take ITC. Whether that motor vehicle is eligible for ITC? No, then these four services, ITC is not available. So this is with respect to the first one, that is motor vehicles related. Then second, construction related. What is that? If there is a person who is engaged in construction of an immobile property. I am a person, I wanted an immobile property to be constructed. Now, if I receive any service in relation to construction of that immobile property, see, I am not doing construction, I want an immobile property. So, what I will do, I will receive some service in relation to construction of immobile property. What service in relation to construction of immobile property? Any service. That could be construction service, interior decoration services, or any service in relation to construction of immobile property. I cannot take ITC. Even if it is works contract service, I cannot take ITC. Same way, if I buy any goods in relation to construction of such immobile property. See what happens when I want an immobile property to be constructed, I will be having two options here. I may go to a works contractor. What works contractor will do? He will only buy the material required and he will only do the construction and finally hand over the property to me. So that is works contract. Can I pay? Can I take ITC with respect to GST paid? No, I cannot take ITC with respect to GST paid. Then second option, I can receive construction services and the material required, I need to buy and give it to the builder or constructor. So I am receiving construction service. Can I take ITC? No. Now I am buying the material from the market. Can I take ITC like cement, bricks, steel, iron, etc. I am purchasing. Can I take ITC with respect to that? No, I cannot take ITC with respect to that. So, three inverse applies in relation to construction of an immobile property is blocked credit. What are the three inverse applies? Number one, any service in relation to construction of immobile property. Number two, works contract service. Number three, any goods purchased in relation to construction of immobile property, blocked credits. Now we have three exceptions here. Exception number one, this discussion is applicable only to supplier and not to the recipient. This discussion is applicable only to supplier and not to the recipient. Correct? No. This restriction is applicable only to recipient, not to the supplier. This restriction is applicable only to the recipient, not to the supplier. That is, I am constructing, I want the building to be constructed. For me only the restriction. If supplier receives any service, works contract service or any material, can they take ITC? Yes. For example, there is a builder or a construction contractor who purchases some material required for construction of immobile property. Can he take ITC? Yes. he receives some services in relation to construction of immovable property. Can he take ITC? Yes. So this restriction is only to recipient, not to the supplier. That's the first exception. Second exception. Suppose if that immovable property is plant and machinery. If that immovable property is plant and machinery, and then with respect to that, can the GST paid be taken as ITC? Yes, even though it is plant immovable, but I can take ITC. Then third point here. Suppose if I incur the expenditure in relation to construction of immovable property, if I incur some expenditure on construction of immovable property, and that expenditure is charged to P&L, then also I can take ITC. Means if it is capitalized, I cannot take ITC. If it is charged to P&L, I can take ITC. So this is with respect to construction related, the exceptions. Now look into this chart. There is a company which wanted an immobile property to be constructed. Now they received services from a works contractor. Whatever GST is paid, can they take it as ITC? Yes, they can take it as ITC. No, they cannot take ITC. Here works contract service, no, they cannot take ITC. Now that works contractor purchased material from the market. Can the ITC be taken by the works contractor? Yes. That works contractor receives construction services. Can the GST paid be taken as ITC? Yes. Now this company purchased material for construction. Can they take ITC? No. If they receive construction services, they cannot take ITC. If the construction contractor receives interior decoration services, can the ITC be taken? Yes. So this illustration, if you go through, you will understand whatever I have discussed. So we completed 2 block credits, and remaining portion we will see in the next video. Thank you.